Welcome everyone to this year's shareholder presentation. My name is Allie Pierce and I am ready to take you on a test drive through the analysis of the Tesla stock performance from 2024. To start, we will offer a brief company overview, followed by a summary of Tesla's financial performance and that of their competitors. Then I'd like to offer some analysis of the problems Tesla is facing and hopefully identify future opportunities for the company, as well as my recommendations for investment. So let's get started on this journey. Tesla is an American company founded in 2003 with the mission of accelerating the world's transition to sustainable energy. Tesla is a solar, battery, and electric vehicle manufacturer and distributor that has a global presence. Current leadership includes a board of 9 directors and a CEO who's Elon Musk. Tesla manufactures 5 different vehicle models and a growing number of high-speed vehicle chargers across the globe. Tesla had an amazing year in 2024 with massive sales pushing total revenue above $97 billion. After expenses, Tesla still managed a net income of $7.2 billion. Tesla holds $122 billion in assets with only $48 billion in debt, and because Tesla has never paid dividends, stockholders amassed almost $73 billion in equity. Tesla has been able to accrue a whopping $122 billion in assets while keeping their total liabilities far below this level. Their leveraging potential is quite high and attractive to lenders and investors. Tesla's overall profit margin means they bank 7 cents for every dollar sold. Tesla keeps a low enough inventory that it could turn over more than 85 times each year and quickly collects its money due from AR. Tesla's current ratio displays liquidity because they have twice the amount of assets that will turn into cash within the year compared to the liabilities that must be paid. Tesla has 2 new competitors in the electric car manufacturing market. Rivian has been around since 2009, but only started getting vehicles into the retail market since 2021. They are currently operating at a loss with poor leverage and even worse liquidity. But with new equity from their partnership with Volkswagen, Rivian is someone to look out for growth and development competition. Lucid Motors is sitting in the same financial position as Rivian. With many years in development but only a few years in production, they are losing money with too much short-term debt to income and poor return on shareholder investments. Tesla is the clear leader in electric car manufacturing. Tesla has a high stock price despite having gone through 2 stock splits in the last 5 years. Tesla stock managed to increase steadily since the last split in 2022. Tesla's net income was $7.1 billion, giving them a desirable price-to-earnings ratio. Tesla had a very high market cap, almost $1.2 trillion, which makes them the world's 11th most valuable company. Tesla's capital mix of low debt with only $48 million and reliance on equity financing, they have over 3.2 trillion shares of outstanding stock, puts them at low risk for default and attractive to stakeholders. One problem Tesla faces currently is it has such a high stock price that it could be unattractive for small traders. They could consider another stock split, which would open opportunities for new and smaller investors and spark renewed interest in Tesla stock. Tesla also has a high current ratio. There is more than enough money to cover their liabilities, and Tesla could use the extra for external investments, research and development, or even offer dividends, something they have never done before. Lastly, Musk's role as White House ambassador had a negative impact on both Tesla sales and stock price, which fell 16% over the period that overlapped with Musk's time with the Trump administration. To combat this problem, Tesla should pass restrictions for what outside leadership roles they can take. Looking to the future, Tesla's growth strategy should include a plan that is linked to market cap because they do not offer a long-term CEO performance award to focus Elon's attention. The board of directors is currently proposing a $900 billion pay plan if Musk is able to vault Tesla's value to $8.5 trillion. This type of pay plan should realign the principal-agent conflict and discourage Musk from partaking in activities that could harm the worth of the company. Tesla could also take their surplus of equity and reinvest more into expansion and development. The electric car market has grown exponentially, and Tesla could seize on this opportunity to release a larger variety of vehicles like an SUV or convertible to further compete with traditional brands like Ford or GM, or use their equity to purchase and extinguish up-and-coming electric brands like Lucid. Given Tesla's current stock performance as well as its positive profitability ratios, I would advise additional investment in the company. Tesla continues to invest money in new products to dominate the future of technology. They have used equity to expand their assets and create a global network of chargers to provide infrastructure to their growing market of vehicles. Stability has been restored to the company, and the stock price is steadily rising since Musk has exited from the White House. And for these reasons, I would conclude that Tesla would be a solid investment now and should increase in value over time.